morning, no surprise, Macron won the French election. I was kind of hoping Le Pen would take it, and there was a part of me that thought she had a chance. Macron, being a pro-Euro individual, has boosted the Euro's strength and confidence in the Euro, and this has resulted in a boost in the gold price. With the Euro rising in comparison to other currencies, gold also rose. I have some information here that I pulled up the other day. Didn't get around to talking about it, so let's start it today. New risk for investors. The Fed considers jacking up inflation rate. This is from May 4th. May the 4th be with you. Just the other day, Money Metals News Service. Investors are underestimating inflation risk. As a consequence, they are underpricing inflation-protecting assets, including precious metals. The Federal Reserve has given itself the objective of engineering an inflation rate of around 2%. However, there are many ways in which real-world inflation can potentially outpace the Fed's 2% target. Firstly, the Fed's preferred inflation gauges are flawed. The so-called core rate of consumer price inflation strips out food and energy costs. The core personal consumption expenditures, PCE index, has also been criticized for underweighting household and medical costs. The PCE number for March, which came out on May 1st, shows the Fed's favored inflation gauge running at 1.6% year over year. That's down slightly from the previous month's reading of 1.8%, 2.1% for the headline unadjusted PCE. Since 2012, the core inflation rate has been running below the Fed's 2% target. That has caused investors to grow complacent toward inflation risk. They seem to be operating under the assumption that 2% is a ceiling. That is a dangerous assumption, not only because of food and energy inflation not being properly accounted for, but also because even the official core number could rise well above target for extended periods of time. Fed insiders call for 4% inflation target. The 2% target itself isn't set in stone. In fact, some current and former Fed governors would like to see the central bank pursue a more flexible inflation objective. Peterson Institute economist Olivier Blanchard argues the Fed ought to raise its target to 4% in order to make up for several years of below 2% inflation. Former Federal Reserve Chairman Ben Bernanke recently wrote a piece for the Brookings Institute in which he proposed ways to rejigger the Fed's inflation target. According to Bernanke, quote, in a changing world of imperfect credibility and incomplete information, private sector inflation expectations are not so easy to manage, unquote. Bernanke proposes targeting higher prices on goods and services. Rather than a fixed numerical target, Bernanke argues the Fed could target price levels. A 2% annual inflation rate implies that a basket of goods costing $100 today would, in 20 years, cost $148.59. If the Fed targets that particular price level, then years of undershooting 2% inflation would require years of overshooting to stay on target. Ben Bernanke's conclusion? The adoption of price level targeting would be preferable to raising the inflation target. We're going to continue on here, but just pause for a second. Just look at the last several phrases and statements that we read. It's pretty interesting to see central banks doing this. You know, it's obvious when you look at this type of an article, you're getting a window into just a fraction of what they do. And, you know, these are the puppet masters, the manipulators. They're at the helm. These are the control freaks that try to manage the global economy. You know, manipulating inflation, manipulating interest rates, money supply. And over the course of the last, century and a half, we've seen the results of this type of planning, centralized economic planning. And this is the catastrophic results of it wiping out people's savings, causing chaos in the markets, unemployment rates, and I don't think it's a good thing, and that's, I think, why you guys are here on this channel. We've always questioned and challenged the central banking approach and what these people try to do. Ultimately, I think they're going to lose control as they have in the past, and they will not have as easy a time gaining it back. It might be very difficult, and they might lose control completely And if that's the case, when that train leaves the tracks, who knows what the results are going to be. One of them, I think, will be runaway inflation and hyperinflation, just due to their never-ending, it seems, expanding of the money supply, those years of zero interest rates, and just the artificial inflation of even stock prices and all of the other investment vehicles they have out there. We're going to see just perhaps quite the correction, I guess you could say, in that financial part of the world. Inflation punishes savers and bails out debtors. Inflation serves as a sort of hidden tax. It punishes savers and consumers as it rewards and bails out debtors, the biggest of all being the U.S. government. The temptation for Congress to rely on the Fed's printing press to finance its otherwise unsustainable deficit spending is simply too great. Bonds and other dollar-denominated financial instruments are currently priced as if inflation won't be a problem for the next 3 decades. Meanwhile, gold, silver, and other hard assets are selling at discounts because most investors aren't concerned about inflation protection. Pause again. Think about that. Most investors don't see what's coming, don't pay attention to it. They live in the, quote, 15-minute mindset, as we've talked about. They got their blinders on, their little myopic view of the world. Everything's rosy, everything's peachy. It's like a reality TV show. And you have somewhat of a grasp on the concept of the consequences of this type of behavior, and you're able to purchase metals at a discount, at a fire sale price. That's one of those rare opportunities where if we seize upon it, we might look like the crazy ones. Oh, these guys are buying metals. Look at all the gains they're missing out in cryptocurrency and the stocks and the bond markets and everything. Well, when things turn in the other direction, the winds change, the sea changes, a storm comes in or whatever, we might be in a much stronger position. And by the time these people realize what's happening and that they should be putting some of their wealth into metals, the prices will have changed dramatically, and it would most likely be too late for them, especially to purchase metals at the prices we're seeing currently. And the author makes that point abundantly clear in this final paragraph on this page. He says, they should be. Now is the time to be concerned. By the time rising inflation rates are a full-fledged economic reality, you can bet precious metals prices will be far higher than where they sit today. I think that article is a good little segue into Aristotle's 5 reasons gold is money. There's many reasons for owning gold, but one of them is it's money, real money, and it always has been and it always will be money. Money. If you can't define a word precisely, clearly, and quickly, that's proof you don't understand what you're talking about as well as you might. The proper definition of money is something that functions as a store of value and a medium of exchange. Government fiat currencies can and currently do function as money, but they are far from ideal. What then are the characteristics of a good money? Aristotle listed them. In the 4th century BCE, a good money must be all of the following. Durable. A good money shouldn't fall apart in your pocket nor evaporate when you aren't looking. It should be indestructible. This is why we don't use fruit for money. It can rot, be eaten by insects, and so on. It doesn't last. Divisible. A good money needs to be convertible into larger and smaller pieces without losing its value to fit a transaction of any size. This is why we don't use things like porcelain for money. Half a Ming vase isn't worth very much. Consistent. A good money is something that always looks the same, so that it's easy to recognize, each piece identical to the next. This is why we don't use things like oil paintings for money. Each painting, even by the same artist, of the same size, and composed of the same materials is unique. It's also why we don't use real estate as money. One piece is always different from another piece. A good money packs a lot of value into a small package and is highly portable. This is why we don't use water for money. As essential as it is, just imagine how much you'd have to deliver to pay for a new house. Not to mention all the problems you'd have with the escrow. It's also why we don't use other metals like lead or even copper. The coins would have to be too huge to handle easily to be of sufficient value. Intrinsically valuable. A good money is something many people want or can use. This is critical to money functioning as a means of exchange. Even if I'm not a jeweler, I know that someone somewhere wants gold and will take it in exchange for something else of value to me. This is why we don't or shouldn't use things like scraps of paper for money, no matter how impressive the inscriptions upon them might be. Please don't be offended if you're one of my friends that also likes Bitcoin. But I try to equate some of these and plug Bitcoin into some of these rules at times and see where it fits. For example, with convenient, I don't consider Bitcoin highly portable because it's not something I can physically put in my pocket or my backpack and journey to a place that doesn't have the necessary infrastructure or technology in order to extract, use, execute, or employ that coin, that Bitcoin, as a currency. So I don't find it as being convenient. It's difficult to use. Not a lot of people recognize it or understand it, whereas any third worlder, second worlder, or first worlder, or fourth worlder, doesn't matter what country they are in, they're going to recognize my gold and know how to use it or have a use for it. Also intrinsically valuable. I don't see an intrinsic value with a series of code or blockchain technology, prime numbers, or a bunch of letters and numbers in a row, or zeros and ones, or whatever you want to call it. I don't see it as having an intrinsic value. No matter, the scarcity or how many units of BTC there are out there, I just don't see it having an intrinsic value because there's a limited number of people that want it or are willing to take it in exchange for something else. And there's a very limited percentage of the people on the planet that have any understanding of how to use it whatsoever. So there, I don't see it being convenient. I don't see it being intrinsically valuable. And here, when you look at this sixth rule, let's read. He says, actually, there's a sixth reason. Aristotle should have mentioned it, but it wasn't relevant in his age because nobody would have thought of it. It can't be created out of thin air. Not even the kings and emperors who clipped and diluted coins would have dared imagine that they could get away with trying to use something essentially worthless as money. Now, I'm not saying Bitcoin can be created out of thin air. I know that fiat currencies are different in that way, and that that's one of the benefits and cool things about Bitcoin is it challenges the fiat empire, as we talk about. But in a way, Bitcoin and these cryptocurrencies have somewhat been created out of thin air. They were invented, and their computer code, and they were created as a concept by people. There is a limited number of them, I understand that, but they're not physical. There's something that was created out of thin air, essentially. Here we have a chart sent by one of the viewers here, a good friend and subscriber, supporter. He often sends some materials that we can share here on the channel. And this is the federal government current expenditures interest payments. So look at that for a moment. This is the federal government's, their interest payments on the debt. Now, as the Fed raises interest rates, the amount the government is going to have to pay to service their debt in interest payments is going to increase. Now, as you read in the earlier first article, what does inflation benefit the most? It benefits the debtors. And who's the debtor in this situation? Well, the federal government. So it's within their interests to create an inflationary environment in order to service this debt. As they can destroy the currency's valuation and have more of the currency, they will be able to pay in dollar amounts the interest on their debt. But you can see the chart there as it just increases, especially look at that right after 2010 there, that upward angle that it's taking there, and it's even spiking worse since then. It just makes sense that inflation is going to be a reality in the future. It's going to continue to happen. It's within the government's interests to have it occur, and we're going to see more of it, and we're going to see it increase in its velocity, its rate, and that's going to result ultimately, well, in an increase in precious metals prices. It's just inevitable. That's a historical precedent. That's one of those rules of economics they can't really do much about. Similar to Gresham's law, when the value of the metal content of coinage surpasses its face value, those coins will then be hoarded out of circulation. Well, that happens every time and time again. Just as with inflation and the government spending and debt going through the roof and ramping up money supply and printing in order to cover that expenditure, well, as the currency becomes worth less, the fixed amount or somewhat fixed amount of precious metal supply on the planet will become more valuable. Nothing they can do about that. It's inevitable. It's going to happen. And that's why back in 1933, as you remember, if you've watched this channel for any length of time and studied some of the history, we talk about what happened. The feds, federal government, FDR, took everyone's gold, revalued it, and boom, 60% or so depreciation in the value of the US dollar, or its purchasing power of the US dollar, and an increase in the valuation of gold overnight. So remember, as we close out here, that a lot of the investors today, a lot of the people that are managing money and preparing for the future with their wealth, trying to preserve their wealth and hedge against things like inflation, they don't understand the full scope or the reality of the consequences that may be looming in the future. The consequences regarding a pension crisis, a crisis involving the federal government, their ability to pay their debt, possible default situation, or complete currency collapse, as well as these currency wars that we've heard about and read about for so many years. We don't know, and one thing we do know is that you look at charts like this, you read the many articles that we read, discuss the many topics that we cover, and it becomes somewhat clear that if you're buying precious metals in this environment, this day and age, you might be in the best position of all. The guys that are pumping money into the markets and sitting there in the casino houses of Wall Street trying to pull slot machines for gains, one of these days the music's going to stop. And as we've talked about, and I wrote that little brief article on the juniusmaltby.blogspot.com, the game of musical chairs, when that music stops, if you don't have a chair, well, you lost the game. And one of those chairs is, well, the chairs that we like to sit in anyway, are gold and silver. You'll always have a seat if your chair is made of precious metals. So thanks for tuning in. Thanks for being part of this broadcast today, this brief little interruption of your time for some boredom, for being part of the Junius Maltby channel and supporting it, and always contributing in the comment section, liking, sharing, subscribing. And do remember, if you have a chance to swing by Patreon.com, I know I've mentioned that in the past, but that's where, because YouTube has decided to stop allowing people like myself to have any form of income whatsoever or revenues off of YouTube, they've challenged the content that we create here. If we question the government, if we create controversial material that is maybe politically sensitive, they've decided to not only censor our videos, but block any revenue from coming from them. Even though it's not a lot, there were times where it did help in the month to month. So one way you can support the channel is going to patreon.com and then /Junius Maltby. See you there. I do provide some private content for the patrons and subscribers that are there. Every once in a while I will release certain articles, and I'm going to try to get to the point where I can do some patron only videos over in that area, or ones that are maybe released a day or two in advance for the patrons, and then will come out for general circulation later on. We'll see how that goes. But I appreciate each and every one of you who has stopped by, visited, left comments for me over there, and also supported the Junius Maltby channel there on Patreon. So I appreciate it. Have a good day, and keep stacking.